Welcome to PIP Insight Macro, the economic calendar briefing for the daily Forex news. Today is the 3rd of July, 2026. This session has 0 high-impact and 2 medium-impact releases coming up. Let's run through exactly what's on the calendar and what it means for the major currency pairs. Welcome back to PIP Insight Macro, your daily Forex news destination. I'm your lead analyst, and today we're diving into a packed European session. While we're light on high-impact releases, all eyes are on ECB President Lagarde's speech at 4 o'clock UTC. That's our medium-impact headline. Stick around as we break down the services PMI data and what it means for euro pairs. Here is the full economic calendar for the daily Forex news. Let me walk you through each key event and what it could mean for the markets. ECB President Christine Lagarde is taking the podium today, and her comments could reshape near-term euro sentiment across multiple pairs. As the voice of the European Central Bank, every word she speaks carries weight in currency markets, especially when it comes to interest rate expectations and economic outlook. If Lagarde signals a more hawkish stance, suggesting higher rates ahead or stronger confidence in inflation control, we'd typically see the euro bid higher across the board. Conversely, dovish commentary around economic slowdown or rate pauses could weigh on the euro and trigger selling pressure. Euro dollar, euro pound, and euro yen tend to see the most volatile reactions because they're the most liquid euro pairs and directly reflect risk sentiment shifts. Watch for specific language around inflation, growth forecasts, and the timing of any policy adjustments. These trigger the sharpest intraday moves. Euro dollar and euro yen will be your most sensitive barometers, as they are heavily traded and reflect both euro strength and broader risk appetite. Expect directional bias to depend entirely on whether Lagarde leans hawkish or dovish relative to market expectations. We've got BOE Governor Andrew Bailey taking the microphone today, and this is a medium-impact event that traders need to have on their radar. When the head of the Bank of England speaks publicly, it often signals important shifts in monetary policy thinking or economic assessment that can shake up sterling across the board. If Bailey's comments come across as hawkish, signaling higher rates ahead or concern about inflation, we'd likely see the pound strengthen as investors price in tighter monetary policy. Conversely, a dovish tone suggesting caution or economic headwinds could weigh on British pound. The real market reaction hinges on whether he surprises consensus expectations or simply repeats what's already priced in. Watch for volatility spikes in the minutes immediately following his remarks, as Forex traders adjust their positioning quickly. Medium-impact speeches like this often create directional moves that last several hours to a full trading session. Pound dollar and euro pound are the most sensitive pairs to Bailey commentary, with pound yen and pound Swissy following close behind. Expect the pound to trend stronger on hawkish surprises and weaker on dovish shifts across all 4 of these major cross rates. We're looking at French industrial production month over month, a gauge of manufacturing output across France. It's a low-impact indicator, but it does give us a snapshot of economic health in the Eurozone's second-largest economy. The forecast is calling for a decline of 0.3% compared to the previous month's modest gain of 0.1%. A contraction here suggests some softening in French manufacturing, though the low-impact rating means we shouldn't expect any major fireworks across the currency markets. Any reaction will likely be muted and short-lived. Euro-dollar tends to be the most responsive to Eurozone data, so that's the pair worth monitoring most closely if we do see any meaningful movement. We're looking at Spain's services PMI, a key measure of economic activity in the services sector. This data gives us insight into the health of Spain's economy, which is an important part of the broader Eurozone picture. The forecast is 51.0, up slightly from the previous 50.1, suggesting continued modest expansion in the Spanish services industry. With a low impact rating, we can expect muted market reaction, but any significant beat or miss could provide minor directional clues for euro strength. The marginal improvement could offer subtle support for the euro if confirmed, though traders should watch for broader eurozone data for more meaningful moves. Euro-dollar typically shows the most responsive movement to eurozone economic data, making it the primary pair to monitor for any reaction. We're looking at Italy's services PMI for today, which measures the health of the services sector, a crucial part of Europe's largest southern economy. While this is a lower impact indicator, it still gives us insight into broader economic momentum across the eurozone. The forecast is coming in at 50.3, up from the previous 49.4, suggesting a slight improvement in service sector activity. This modest beat could provide a minor tailwind for the euro, though with low impact, we shouldn't expect dramatic price action. Any reaction we see will likely be absorbed quickly unless it confirms a larger trend shift in European economic data. Euro-dollar will be the most sensitive pair to watch, as it's the primary risk gauge for euro strength in today's session. We're looking at the French final services PMI, which measures economic health in the services sector, the largest part of France's economy. Today's release confirms whether earlier estimates were accurate. The forecast sits flat at 47.4, matching the previous reading, which signals continued contraction in French services activity below the 50-point expansion threshold. With low market impact expected, we're unlikely to see dramatic reaction, though any significant revision could trigger modest euro movement as traders digest the broader eurozone growth picture. Euro-dollar will be the primary pair to watch, though moves are likely to be contained given the low impact classification. We're looking at Germany's final services PMI for the month, which measures business activity and sentiment across the services sector. This is a key indicator of economic health in Europe's largest economy. The forecast is sitting at 46.9, barely budging from the previous reading of 46.8, which suggests the services sector remains in contraction territory below the 50-point expansion threshold. With such a modest expected change, we're unlikely to see significant volatility, but any surprise divergence could still prompt some brief positioning shifts in euro pairs as traders reassess eurozone growth momentum. Euro-dollar will likely capture the most direct attention, as it's the broadest measure of euro strength relative to the world's reserve currency. We've got the final services PMI reading for the UK coming in, and this is our last look at service sector activity for the month. It's a low-impact release, but it still gives us valuable insight into whether British services are holding up or starting to soften. We're looking at a forecast of 48.8 versus the previous 48.7, so basically flat. Since this sits below the 50 neutral level, it confirms the services sector is still contracting, just slightly. With such a marginal move expected, we shouldn't see any sharp sterling reaction, though it could add context to the broader economic picture traders are already pricing in. Pound-dollar will likely be the most responsive pair if there's any meaningful deviation from expectations, given the direct dollar-pound relationship. We're looking at Italian retail sales month-over-month, a low-impact indicator that measures consumer spending trends across Italy. While it's a smaller data point on the economic calendar, it still gives us a window into Eurozone consumer health. The forecast is calling for a 0.2% increase versus the previous flat reading of 0%, which would suggest a modest improvement in retail activity. Given the low impact rating, we shouldn't expect dramatic volatility across the euro pairs, but any significant surprise, either way, could spark some short-term positioning, particularly if it contradicts broader Eurozone economic sentiment. Euro-dollar is typically your most reactive pair to Eurozone data, so that's the one to watch for any meaningful price movement here. We've got the final services PMI reading for the UK coming in, and this is our last look at service sector activity for the month. It's a low-impact release, but it still gives us valuable insight into whether British services are holding up or starting to soften. We're looking at a forecast of 48.8 versus the previous 48.7, so basically flat. Since this sits below the 50 neutral level, it confirms the services sector is still contracting, just slightly. With such a marginal move expected, we shouldn't see any sharp sterling reaction, though it could add context to the broader economic picture traders are already pricing in. Pound-dollar will likely be the most responsive pair if there's any meaningful deviation from expectations, given the direct dollar-pound relationship. Based on today's releases, the pairs most at risk of volatility this session are Euro-dollar and Euro-pound and Euro-yen. Here is a breakdown of why each pair is in focus. That wraps up the complete daily Forex news economic calendar breakdown. The key theme today is ECB Lagarde speech dominates light European day today. Keep a close eye on the release times. A surprise deviation from forecast is often where the real moves happen. This is educational content only. Trade safely and manage your risk. Thanks for tuning into Pip Insight Macro. Don't forget to like and subscribe for daily Forex insights. Follow us on X at Forex Insight for real-time market updates. We'll see you tomorrow.